Hi guys, welcome to the YouTube channel, The Novel Trading. We are continuing with the Forex mentorship over here. This is day 4. I had some traveling commitments and that is why I was not able to give live sessions to you. So I want that your education should not stop. So I'm recording this session for you guys. I hope that you will focus on this session properly and learn the candlestick analysis. We have covered all the major concepts of the Forex market basics like how to calculate the pips, how to calculate the position sizing, the fundamental analysis. So till now we have covered all the major aspects of the understanding of what you need to know in the Forex market. So continuing this education, we are understanding how to do the technical analysis. As I told you that there are two types of analysis in the market. The first is the fundamental and the second one is the technical. We are already done with the fundamental analysis, and if you have not seen the videos, you can go on the right hand side and you will see the link of the previous videos in which I have told you in detail about how to do the fundamental analysis, how to do the news trading in the market. Now what we are doing is now we are trying to understand how to do the technical analysis in the market. So understanding the technical analysis, we have to go through the major part is the candlestick chart. As we have talked in the previous session that there are majorly 4 types of charts in the market: the bar chart, the line chart, the candlesticks, and the Heiken-Ashi. And I told you majority of the traders uses the candlestick chart, and we are also going to understand the candlestick chart. And why is that? Not because it is in some common, or you can say it is in trend that all traders use candlesticks, that's why we should use the same chart. No, as I told you before as well, and I'm repeating this, that the candlestick will tell you about the emotions of buyers and sellers, because of which you will be able to take some wise decisions in the market. Okay, so let's understand how we can interpret the candles, what type of emotions of buyers and sellers are being presented in some candlesticks in the market. So let's go on the slides, guys. This is a small disclaimer, please go through it once. So majorly, let's start with the candlesticks and the patterns. So what we are going to do, we are going to understand the major step of the technical analysis going through the candlesticks in the market. So first question is very important, is what is candlesticks? The candlesticks are the reflections of the decisions of the buyers and sellers in the market. Since there are two major participants in the market, the buyers and sellers. The buyers want the price to be pushed towards the upside, while the sellers want the price to be pushed downside. Okay, and what we have to do when we are taking a trade, let's say I am buying, I'm going long, or I'm short selling some position in the market, I have to understand what kind of domination is there in the market. Let's say if the buyers are dominating in the market, then they will drive the price towards the upside, because whenever there is a domination of buying, what the buyers do, they buy in major quantities, which let the prices to go upside. Similarly, if there is a domination of the sellers in the market, we can estimate that the price will try to go towards the downside, and that is why whenever there is a selling domination in the market, the sellers want the price to go downside, and we have to do selling with them. To what extent the action of the traders or the participants of the market moves the price and the strength behind the same move. So as I told you, that the candlestick will be able to represent the emotion of the buyers. And because if you understand the candlesticks well, then you will be able to decode the emotions of buyers and sellers, and you will be understanding who is in strength right now. If the buyers are in strength right now, then the price will try to go towards the upside. But if the sellers are in strength right now, the price will drive towards the downside. Candles signifies who is in control of the market, but does not signify about the strength of the buyers or sellers behind them. So basically, what does this mean is that it will show you which party is dominating right now. Let's say if buyers are in domination, then their price will be able to go towards the upside. If the sellers are in domination, then it will be able to go downside. But it does not signify the real strength of the buyers and sellers. For that, we have to understand the whole price action. The candlestick will be able to make you understand about the current emotion of the market. If I try to interpret a single candlestick, it will show me different thing. But if I try to understand a bundle of candlesticks, only then I'll be able to understand the strength of the market, if the buyers are in strength or the sellers are in strength. So majorly the strength of the actions of the buyers and sellers is shown in the body of the candle. So let's understand the whole candle, and then we will be able to understand the meaning of this last line, that the strength of the actions of buyers and sellers is basically represented or shown in the body of the candlesticks. So let's go on the next slide and understand what is it trying to say. So if you will look over here, there are two types of candles in the market. First one is the green one, or known as the bullish candle in the market, and the second one is the red one, or known as the bearish candle in the market. So majorly, if you will try to understand the technical components of the candlestick has majorly 4 areas which you need to focus on very clearly. So basically, these are the major thing: the high, the close, the open, and the low. So whenever there will be a bullish candle in the market, what does it mean? That the price open from here. So let's say at 9 o'clock, our market starts. Okay, I'm just giving you an example. We know that the market starts at 9:15, but for simplicity, we are taking an example. Let's say at 9 a.m., the price started at $100. Okay, the price started at $100, and the price was doing what? Over the day, the price will try to do something like this. The price will try to go up, or the price will try to go down. So over here, what did happen? First, the market started at $100. Price started moving downside. price started moving downside, and let's say as soon as the price touches the $90, the buyers started showing the interest in the market, and then they started buying in heavy quantities, because of which the price started moving towards the upside again and again, again and again. Let's take an example that the market tried to reach at $120. Okay, so from $90 to $120, the buyers were in strength. The buyers were taking control of the market. And as soon as $120, or let's say a single price level is basically touched or mitigated, what will happen? The sellers will get interested in this commodity, because they think that all the, let's say if the price has moved this much high, then there will be some chances of reversal. And from here, we can expect that the price will try to go downside and will give you a close, let's say at $110. As soon as the market reaches at $110, the market stopped. Okay, and the market stopped at 3:30 p.m. So what did happen in the overall market for the whole day? The market started at $100. The market tried to move towards the downside, made a low at $90. The market started moving towards the upside at $120. And from there, the sellers started their position in. And then what happened? The price little bit went downside, and then the market closed at 3:30 p.m. So what did happen? This is the whole momentum, or you can say this is the whole major move within that time period. Now, this candlestick can be a 1 minute time frame, can be a 5 minutes time frame, but the major rule of the aspect, or the aspect of the candlestick, will remain the same. The candlestick will show you if the open price and the closing price is different. That means the market is not closing where it started. That means there is some momentum which has happened for that time period. And if my closing price is basically bigger than the open price, so over here, when we took this example, let's say the price is at $100 and the closing price is at what? Is at $110. Now you can see that the price of the closing actually moved plus $10 in the market, right? So what did happen? Price will show you a bullish momentum, because in this candle, if I ask you normally, let's try to think about it. If I ask you normally, who is in control? What do you think had happened in the market? The buyers are in control. They have bought in heavy quantities in the market. Similarly, when I'm talking about this red candle, if I am taking the same example, when the closing price is lesser than the open price, then the candlestick will form as red. Let's say if the open price was $100, but the closing price for the day is $90. Then what did happen? Actually, the price plus $10 towards the downside. So what you can see, if I'm just asking you not about the data or the candlesticks or the statistics, if you are looking at this candle, what can you understand? That the sellers are dominant right now. They have sold in heavy quantities, and because of which the price started moving towards the downside. Okay, so this is how the candlestick shows you the emotion of the actions of buyers and sellers in the market. So basically, whenever a candlestick is formed, the major thing is the open and the closing price. If the closing price is bigger, then it will be a formation of a bullish candle in the market. If the closing price is less from the open price, then there will be a red candlestick formation in the market. Now, these candlesticks also have two major parts, the body and the wick. Okay, so basically every candle will have two wicks in the candlestick and only one body in single candle. So over here, what we can understand, this wick is a representation of a different emotion, and this body is a different emotion. And that's what we are going to learn today. We have to understand how the candlestick should be interpreted in the rightful form to decode the emotions of the buyers and sellers in the market. Okay, so over here, the last line, when we understood the body of the candlestick shows the strength of the buyers and sellers. So if there is a huge body of the candle, that means that the confidence of the buyers is very huge. The strength of the buyers is huge in the market. Similarly, if the body of the red candle is huge in the market, that means the strength of the sellers is huge right now. And you can expect a bearish momentum in the future. Similarly, if the body of the green candle is very big, then we can expect some bullish momentum in the coming future. Okay, so this is how you start interpreting the market in the real formation. Okay, so let's go on the next slide and understand how we can interpret the candles more. So what we are going to do, we are going to do some candlestick patterns in the market as to how the candlestick forms. Different types of candlesticks shows different types of emotions. Let's say if you will look at this chart, what does this mean? This candle has a huge red body. Okay, try to observe properly. This candle has a huge red body and a lower wick. Okay, so what we can understand from here is that the confidence or the strength of the actions of sellers is very huge, and that is why in the future you will see that the price has moved towards the upside. Okay, so this is how we interpret the charts, or we do the technical analysis candle by candle. What we are going to do, we are going to do some candlestick patterns, the different types of candlesticks, the different formations, and we are going to understand how and what does the candlestick means with the help of decoding the emotions of buyers and sellers. So let's say whenever the market is moving towards the downside and you see such such formation known as the hammer candle, or some traders call it as a pin bar candle. Okay, the major thing what you have to understand is that the market is showing you signs of reversal. Okay, the market is showing you signs of reversal. Okay, because over here, I'm not saying that the body of this candle is very huge. No doubt it is very less. But what you can see is a huge wick in the market. And what does this huge wick means? Huge wick means the domination of buyers and sellers in the market. If the price has a huge long wick towards the downside, that means this is a good demand zone or a strong demand zone. Because specifically from these price levels, the buyers started dominating in the market. Even if the price was in the downtrend, the buyers came in the market and started buying at a huge momentum in a quick way. And that is why even when the price was going downside, now try to understand the opening price. If you understand the candle, let's say if the open price was at $100, the first price went down because of the downside momentum. First, the price went down, went to $80 over here. Okay, I'm taking a hypothetical example, but you have to understand the emotion of the candle within that. The price started at 100, price went down to 80. The sellers tried to take over the market, but from the 80 price level, the buyers pushed the market towards the upside. Then the price started moving towards the upside, let's say closing at $110. So what does this show? That from the price levels of 80 to 100, a huge domination of buyers is there. So even if the price comes back, test this zone, high probability says that the price will try to go upside only. Okay, because the buyers are showing their emotions with the help of the VIX. Similarly, if there is a huge wick, which we will understand in the next slide, we can say that the seller is dominating. If there is a huge wick towards the upside, we can say the seller is dominating. But right now, if you will look, this pin bar candle or hammer candle shows you that the price is going to reverse towards the upside. Okay, so whenever you are doing the technical analysis, like you have seen me in live trading videos on my channel as well, what do? I try to decode the emotions of buyers and sellers and then try to estimate what is going to happen in the future. So if such candles, after a downtrend, if such candle is forming in front of you, you can expect that the price is going to go towards the upside in the coming future or in the coming days in the market. Okay, so let's go on the next slide and understand the same thing, the shooting star. So whenever you have an upper wick or a huge wick towards the upside where you can see that the sellers are dominating at these price levels, you have to understand that the color of these candles doesn't matter. So even if I'm talking about the previous slide over here, the color of this candle will not matter. If this is a green candle, this is a red candle, both the candles are showing you a bullish domination in the market. If there is a candle with a huge red body, then this is basically the strength of the sellers. But whenever there is a lower wick on the downside, you will see a huge buying domination in the market, and this is known as the demand zone in the market. This is a very, very strong demand zone. That means that there are so many buyers who are willing to buy, and no matter how many quantities the sellers actually are selling in the market, the price will still try to go towards the upside. Okay, similarly, when we are trying to understand the shooting star pattern or the pin bar candle towards the upside, you have to look at the wicks of the candle. Now, when I started doing this technical analysis as a beginner, I'm telling you, I also started mugging up the names of the patterns. There are more than hundreds and thousands of these patterns. But if you understand the proper emotion behind every candlestick, then I can assure you that you won't need to learn any kind of names of these candles. No doubt these technical jargons will be helpful for you in your daily trading scenario and communicating with other traders in the market. But if you want to understand the technical analysis well, then just try to decode the emotions of the buyers and sellers within the candlesticks. So when the price is forming a huge wick towards the upside, that means this is nothing but a huge seller domination area. So if the price is an uptrend from a long period of time and you see such a candle which has a huge wick towards the upside, that means this is the sign of reversal. The sellers are trying to dominate in the market, and even if the market goes back, retest it, you will still see that the market will try to go only downside. Okay, so these are the two major patterns which you have to understand. These are the two major candlesticks that you have to take care of. The pin bar candles, if the pin bar is towards the downside or if the wick towards the downside is higher, that means this is a buyer dominated area and we can expect that the price will try to go upside. Similarly, when the price is forming a candle which has a higher wick or a long wick towards the upside, that means the sellers are in domination and you have to expect a bearish momentum in the market. Okay, I hope that you're able to understand such patterns, so you are able to understand and decode the emotions. And if you have any problem, guys, you can contact me on my WhatsApp number anytime for free of cost, and you can also put your questions in your comment box. If you will see in the previous videos, many of my students have asked their questions on the comment box and I have replied to each and every of their query within 24 hours. So if you have similar kind of query in which you're not able to understand any of my thing or any of the concept that you're discussing over here, you're always free to contact us. Okay. So I hope that you're able to understand these two major types of patterns, the hammer pattern and the shooting star pattern. So let's go on the next slide and understand what is the next candle formation that we have to very much focus on is known as the Doji in market. Doji candle is highly important because this Doji candle suggests the confusion and possible reversals. So those traders who want to catch the reversals should be aware of these Doji candles and they should be able to take action on these Doji candles very well. What is this Doji candle and how does it look like? Basically, whenever there is no gap between the open and the close price. Let's say the price started at $100 and also ended at $100 only or closed at $100 only. That means you will see that there is no kind of gap between the open and close price. And that is why this is known as Doji candle, because it suggests confusion in the market. Since there is no body in the candle, we cannot see who is in strength or who's in control of the market. Okay, so that's why if the market is going towards the upside and you see a Doji formation, high probability will say that the price will try to go downside. Okay, so this is the best reversal pattern. Now over here you can see that there will be only wicks of these candles. The wicks can be bigger, the wicks can be smaller as well, but it doesn't matter. What matters is what is the emotion that the doji is showing. Okay, so since there are different types of doji, there are different names to it. So let's go through it once. If you look like this is a plus sign, you will see this is a neutral doji because it has no body in the market and the size of the both the wicks are equal in the market. Okay, and that is why it is known as the neutral doji in the market. Over here the same thing is happening. There is no body, there is an equal size of the wicks in the market, and that is why this is also a neutral, but because the wicks are huge, we call it as a long-legged doji. Now this is a very important gravestone doji. This will be looking similar to you as a hammer candle or a shooting star candle because it has a huge wick towards the upside. So understanding the emotions, what you can see that the price is giving a seller domination area and there is no buyer domination area or any kind of buyer at this price level. So this is known as the gravestone in the market. Similarly, when the price has making a candle with this where the wick is towards the downside and it is huge, then you can call it as a dragonfly doji in the market, and you will see this is a buyer dominated wick and no sellers in this candle. So basically, whenever we are looking at the doji candle, we have to see that it will be a formation or a possible reversal is very much expected after these candles in the market. This is a very nice example of how the doji candle forms. If you will look, the price was an uptrend in like this, and then what did happen over here? You will see a neutral doji in the market, and after this candle was formed, you will see that the price has started moving towards the downside. Okay, so this was a possible reversal sign. And let's say if I'm trading over here after seeing this doji, my bias is also confirmed that I want to just sell from here. Okay, then going to the downside, the price was moving in the downtrend. When you will see this is a long-legged doji again, and you can see that the lower wick is huge. That means this is a buyer dominated area. So what we can expect that the price will try to give you a reversal towards the upside. Okay, so this is how you have to take care of the technical analysis. You have to study the candlestick charts. You have to interpret what the candles are saying. So we have ended our one candlestick pattern. Now we are coming across to a two candlestick pattern, and what does two candlesticks in total can show us or help us decode the emotions of buyers and sellers. So first two candle pattern that we are going to discuss over here is known as the bullish engulfing, and this shows a bullish sign in the market. This shows strength in the market. And how is it formed? If you will look, there is a small bearish candle. There is a small bearish candle over here. It will have a proper body. It will have proper wicks. If there is a candle, any other thing like this, if there is a doji or other than like this, then this is not a pattern. You have to see that this is a clearly pattern, and you should memorize that this is the only formation when I should signal it as a engulfing pattern or not. Because sometimes what happens is even after learning the candlestick patterns, you're not able to trade profitably. And why is that? Because let's say if there is a similar kind of pattern over here like this, right? Now, many traders will call this also as a bullish engulfing, but this is not bullish engulfing. So what does bullish engulfing and how it is properly formed? Over here, you will see that when the price is coming down, there will be a red candle. And in front of this candle, you will see a huge green candle, which has a huge body. And this body is covering the whole candle within itself. That means the strength of the buyers from this body, what we can see that the strength of buyers is overtaking the strength of the sellers in the market. And that is why we can expect that there will be a possible bullish sign in the market in the coming days or in the coming time period. Okay, so if such kind of pattern is formed in front of you, you have to expect that the price will try to go up. And I will tell you, these candlestick patterns have been the entry reason for the many traders. Many profitable traders just trade on candlestick patterns and they're making millions of dollars of profit on a regular basis. So try to focus when you're doing intraday trading in the market. You have to take care of these small things as well. Okay, many traders are just get busy in the big things. They want to handle big capital and something, but you have to have big knowledge in your market. Only that knowledge will help you make some dollars on a regular basis. If the price shows such a pattern in the market, then we can expect that there will be a bullish. This is a bullish signature, and the price will try to move towards the upside in the coming future. Similarly, if you will see on the next slide, you will see that this candle is nothing but a bearish engulfing. Now, the similar kind of pattern is over here. Price has made some small green candle. The price was, let's say the price was moving towards the upside. Price formed a green candle, and against this candle, price made a huge candle, huge red candle in front of it. That is showing that the strength of the sellers, okay, the strength of the sellers is taking over the strength of the buyers in the market. And that is why in the future, the price will try to go towards the downside. So whenever such a formation where there is a small green candle in the market and against it, there is a huge red candle covering the whole candle, you can expect this is a bearish engulfing candle in the market, and you can expect that the price is going to go towards the downside. Okay, so major thing is identification and then implementation. Try to identify the emotions of the buyers from these candlestick patterns and then try to implement it. Then try to implement your knowledge in the live market and make some regular profits in the market. So I hope very much that these candlestick patterns are very much clear to you. Okay, so that whenever you're trying to do your technical analysis, you should have no problem in reading the market and reading the charts. Okay, so let's go on the next slide, guys. This is known as Bullish Harami candle, okay, or Bullish Harami pattern in the market. Now, Harami is not a Hindi word over here. This is a Japanese word over here, okay? So try to interpret in the Japanese language only. Now, what does this Bullish Harami means? Bullish Harami candle means whenever there is a huge red candle in front of you with a huge red body, and against that you will see a small green candle with a small body. But what does this mean? What does this Bullish Harami pattern means? That buyers are now showing strength in the market. You will see that the price should little bit gap up while making this type of pattern. A gap up is necessary. That means there is a huge volatility that is being produced by the orders by the buyers itself. The price should close over here. The next candle should have opened at this level only. Rather, the price gapped up, opened over here, and slightly closed over here itself. But I'm telling you, 70% of the times, majority of the times, you will see that the price is forming bullish momentum in the coming time period. Whenever the price is going downside and you see such type of pattern in the market, the next proposal or the next perspective we can have in the market is of bullish momentum. The price will try to move towards the upside after this pattern formation. And similar to this Bullish Harami, there is another pattern known as the bearish Harami pattern. This is a similar kind of case where you will see a huge green candle in front of you. The price was moving towards the upside. There is a huge green candle in front of you, but against that candle, there is a small red candle formed in the market. Now, this red candle is formed after the gap down. Because the price closed at this level, the next candle should have opened at this level only. Rather, the market gap down and opened at this level. That means the strength of the sellers, that means the volatility created by the sellers is very huge, and we can expect that the price will try to go towards the downside in the market. So identifying the language of the price is very much important by understanding the alphabets of the price action, which is known as the candlesticks. And different candlestick patterns have different emotions hidden within those. If you are able to decode those emotions, if you are able to decode the aspects of trading or the concepts hidden in these candles, then you are nothing but a more profitable trader than you can't even imagine in the market. Okay, so these are the major types of patterns which we are discussing over here. You will see these kind of patterns on a regular basis. When I live trade in the market, I always try to show you such candlestick patterns so that you can understand that these candlesticks are the ones which are helping me to drive my emotions in the right side of the market. Every trader is emotional in the market. You can't always blame your emotions for your losses. because you have a lack of knowledge. That is also a major reason because of which you are not making the profits. Okay, so try to grasp more of this knowledge, try to understand more about the price action and the candlesticks in the, you will see enormous results in the future, and you will be able to call yourself a profitable trader because your sheet will be showing that, your trading journal will be showing that whenever you take a trade, you're taking the trade in the right direction. So since we have done the one candlestick pattern and the two candlestick pattern, that there is another thing known as the three candlestick pattern, and the first candle pattern that we are going to understand in this is known as the three white soldiers. So whenever the market is in downtrend, this is a snapshot of a real chart in the market. Whenever the market is in downtrend and you see such three candles, you see such three major candles, the green candles in the market with huge bodies. What is this showing? This is showing the strength of the buyers in the market. The strength of the buyers is huge. And that is why if you will look that the price has started moving towards the upside. Okay. And that is how you can identify that whenever the price is moving downside, the price created three major candles over here showing that the buyers have strength right now and the market should be going towards the upside. And this is how we are making our perspective. What is the market trying to do in the future? Similar to the three white soldiers, you will see that there is a pattern known as the three black crows in the market. Now, three black crows are basically three red candles, three major red candles of what we are talking. If you will see that the price was moving towards the upside with huge confidence, with huge domination of the buyers in the market. But as soon as price reaches the top and creates these kind of candles in the market, these major three body candles in the market, they are showing you the strength of the sellers. And because the strength of the sellers is huge right now, we can expect that the price will try to move towards the downside only in the coming days or in the coming time period. This is how you are making your journey well, by understanding the proper price action in the market, proper candlestick formation in the market. And this is how we are decoding the real emotions of the actions of buyers and sellers in the market. No doubt you are not able to memorize the names of these candlestick patterns. It doesn't matter. What matters is if you are able to decode the emotions of buyers and sellers in the market, then you will have the best results out of your trading sheet. So in this slide, we are going to have a live example. We are going to discuss a live example of a chart of the Euro USD, and we are going to understand how these different candlestick patterns can show us the future perspective of the price. Now, starting from here, what I will see is that the price was little bit in the downtrend like this, and you will see that there are three major green candles over here. Now, three major green candles shows us what? Shows us that these are three white soldiers in the market. This is the strength of the buyers, and the price wants to go upside. And if you will look in the future, the price started moving towards the upside. So looking at these candlesticks, you can make an idea that the price is either trying to go towards a downside or upside. But because these are three major green candles over here known as white soldiers, we can expect that the price will travel towards the upside. And after the price was traveling towards the upside, price took a smaller pullback in the market, price started a small downtrend. And as soon as this downtrend came, you will see a next candlestick pattern known as the Doji. So since over here at this Doji formation, we can see that the price was moving towards the downside. And because the Doji shows us what? Doji shows us the confusion or the possible reversal sign. As soon as this doji started forming, the price moved towards the upside, giving you another kind of bullish momentum in the market. And in the next one, when the price was moving towards the upside, you will see a bearish Harami pattern. Over here, try to understand and try to identify what does this pattern look like. There is a huge green candle against which there is a small red candle in front of it known as the bearish Harami. And from here, we can expect that the price will travel towards the downside as it did over here. After traveling to downside, you will see a bullish engulfing pattern at this level, after which we can understand that the price is showing you a bullish momentum and we can start buying for the future price and take some profits in the market. After this, you will see that there is a bearish engulfing over here from where the price started a movement towards the downside and continued downside until and unless there is a again bullish signature in the market. Over here we can see that this is again a bullish Harami. There is a huge red candle and in front of it there is a small green candle, from where we can expect that the market wants to go towards the upside, which it did and started in an uptrend. And as soon as this uptrend wants to get over, you will see three black crows in the market. See, these three major red candles shows the strength of the sellers in the market, and we can expect that the price will travel towards the downside in the coming future. So this is how you interpret the candlestick and its formation and its pattern on a regular basis. You have to keep up a practice of this. You have to understand the core of the decisions that the buyers and sellers are taking in this market, and these are represented in these form of candles in the market. Okay, once you start interpreting these candles, once you start understanding and identifying what kind of pattern formation is there. Now, what is pattern? The behavioral pattern. I'm not talking about the candlestick pattern, the behavioral pattern. Let's over here. The bullish engulfing behavior shows that the buyers are showing their dominance and the strength in the market. Okay, so this is the pattern that I'm talking about. Every time, whenever the price is going to reverse towards the downside or is it going towards the upside, it will show you some signature of the dominance by the buyers and sellers in the market, giving you a proper direction for the future perspective to be made in the market. So I hope with this example, you are clear with the candlesticks and its formation and its patterns, what can the candlestick represent in the market. If you have any questions, do put in the comment box and do not forget to subscribe to this channel, guys. We have made a lot of effort in making you understand these basic concepts of the market in an overall compilation, because you can see the other videos on social media platforms. You will see that they have talked about the different concepts, but you are not able to connect the dots. With this series of Forex mentorship of Forex and Gold, I am trying to make you understand how will you be able to connect the dots of the market. How can you do the fundamental analysis with the help of news? How can you do the technical analysis with the help of candlestick, and then combine both of them so that you can make some wise decisions in the market while trading and while buying and selling in the market. So we are concluding this video, guys. I am hoping that I'll be able to continue the live sessions again. Because of my traveling, if it is not possible, I will give you another video recorded session of these concepts again. And if there is any problem, you're free to contact me on the WhatsApp number given over here. And you can also put your questions in the comment box, because these comments directly reach to me and I am able to reply to you directly. Sometimes my inbox gets very large because of the lot of pending questions. So if you have any questions and you want an answer at the earliest possible, try to comment on the videos so that I am able to reach you directly over there and there itself. Okay, guys, thanks and best of luck, and let's you meet you in the next video. Good luck to you, traders.